Welcome to readtheticker.com. Today I'd like to talk about Wycoff 2.0. Here we have the standard Wycoff market phase chart. And we really have two types of action. We have the vertical action, either up or down, and sideways actions of either accumulation and distribution. The idea is that we could have a test that would definitively define one of these market phases. And I found it was easy to define the markup or the market down phase by using Gann angles. So that basically means if we could define markup or markdown definitively, everything else on the chart by process of elimination would be either distribution or accumulation. Now let's have a look. Just a quick recap. The Wyckoff method, he would establish his 9 tests in a period of consolidation and then use channels for the breakout. But the channels could be any angle on the way out, so the markup could turn into accumulation or more distribution or another training range. So unless it was very steep, you didn't really know if it was pure markup or not. Whereas if you use Gann angles, you can be pretty much 80% sure if price is travelling up, say a 1 times 2 Gann angle, i.e. the blue corridor, that if price stayed within this corridor here, that the markup process was pure, that any consolidation or distribution was going to be mild and continue on until the line broke, of course. Now if you had price moving up on the green or the grey corridor, then obviously price is pretty excited and it's moving up pretty quickly. Until the line breaks, you're not going to get a consolidation of any significance. But if you've got price moving up the red corridor or the 1-to-1 angle, there's a good chance you could get quite a substantial period of consolidation, due to the fact that it's just a wider corridor. So conclusion was, if you've got price moving up the 1 to 2 Gann angle over a period of time, it's an 80% chance that you got pure markup or markdown. If it's moving up the 1-to-1, you could probably say it's about a 70% chance it's markup or markdown. Both of them are very, very good tests. In the end, you have to say, once you've determined a test for markup or markdown, everything else on the chart is some form of accumulation or distribution, because you don't really know whether pattern's accumulation until it breaks out up. Obviously if it breaks down south, it's distribution. And that's how we ended up with our Wycoff 2 model chart. Here we have here. So we have a markup process with our extra tests of Gann angles to identify pure markup and pure markdown. Now the cycle part comes into the fact that through the phases of the market being cyclical in nature, is that we can be forewarned when the next distribution or accumulation phase may occur, and this goes for the smaller patterns of the reaccumulation and redistribution. So it all fits in rather nicely, and it's simple tests and it's easy to monitor. But the best part about this whole process of Wycoff 2.0 is that when you call a market phase, you can be 100% sure that this phase is markup or markdown, and the rest of it's either accumulation or distribution. You're not umming and ahhing, thinking maybe this is a trend or maybe this isn't a trend. You know exactly what phase you're in, therefore you can manage a trend accordingly. The only way you can test this out, as I have done, is to actually go to a chart and start trying to find pure markup. Here we're going to use the GLD chart to determine markup, markdown phases, accumulation and distribution. As I said before, we're going to use our Gann angle to determine pure markup and markdown. Now, I've determined that price action above the blue line, you can be 80-90% sure that the price has been marked up or marked down when it stays there. Obviously, the further you go to the left, the more excitable prices is going up. When price is above the red line, markup is going on, but it's more likely to be have at risk for consolidations. Okay. So obviously here, let's have a look at way back in 1978 in the gold chart. The last sort of pivot point before it really exploded. Putting that there. As you can see here, the pure markup here was above the green line, which is the green corridor, which is 1 to 4 Gann angle, and even actually creeped up above the 1 to 8. So as you can sort of see here, the trend, the explosive trend ended when it broke the green line and came down. Now that there's pure markup. Okay, now when it broke the green line, you could say that because this green line wasn't broken on the way down, this is pure mark down. So there wasn't really any distribution phase. It was more like a scream up and a scream down. Pretty typical of the commodities market. As you can see here, you could say from the high of the 1980 all the way down to 1986, gold was actually marked down because it trended down at a pace faster than 2 units of price to 1 unit at a time. Even though we had this little pullback here, it was just sold into, this rally here was sold into all the way down to here. Right, and we pivot point there, we put the bullish Gann angle there. Now we had a slow but mark up here above the red Gann angle. Wasn't much of a base. There was no horizontal pattern for accumulation. It was just a sell-off and a buyback again. So some of the bulls came back in for a second burst. And started buying it up here, and didn't get really explosive. You probably could reset the angle here. As you can see here, the blue line, price was above the blue line. That was pure mark up here, from there to there, pure markup. And of course, we don't get too many sideways patterns here. It's a scream up and a scream down. We get a mark down again. Finally, I'll put that back up here. Whoops. We start to get accumulation here where it goes sideways. It breaks the red 1 to 1 line and it starts to go sideways. And we should get a lot of this whole sideways pattern here is accumulation. And then it's marked down again, as you can sort of see here. At 1 to 1, stays underneath that and slowly marked down. Now you're saying, well, you know, why are you using a Gann angle? The thing about a Gann angle, which is really great, is that you only need 1 point on the chart, 1 pivot point. Now you're saying if you use a trend line, you're constantly redrawing a trend line because it's based on 2 points and the trend line can be broken. If you're using a channel, you need 3 points. So here, once again, from that point down there to about there, price has been marked down at a moderate pace of 1 to 1. It breaks there. We started getting a basing pattern, so that's accumulation there quite easily. There's no appreciation. Hit the pivot point there. So, for example, if I was hitting pivot points along here, I can't call any of that mark up because the price breaks the angle very quickly. But as soon as I put it on this pivot point here, I know it's a long-term chart, so it's hard to show the detail. But price slowly creeps along the 1 to 1 line. I'll move it a bit long here. Yeah. So here markup starts to creep in here. We're moving out of the accumulation, and under the Wyckoff 9 tests, as he says, he would like to see rising highs and rising lows, and as you can see, it's creeping along there. It's not explosive yet until we start getting above resistance, or as Wycoff called, I think it was breaking the creek or jumping the creek. So we can see the price has been marked up here. So once you know the markup phases and the markdown phases, you can easily circle around where the accumulation is. Sometimes you get a direct transfer from markup to markdown without any distribution. It's a scream up and a scream down. That's the way it is with commodities. For example, what's going on now? This gold chart is at, as you know, it's been screaming up in pure markup since 2005, and obviously since there it's even racing up crazy from 2009. So here we're above the 1 to 4 line, so the green corridor, which is why I sort of suspect we're going to get a bit of a pushback onto the green line. And obviously with this correction here, it was marked down very shortly. Put that angle back there. So here we're in markup process here above the blue corridor. It was screaming down and a markdown. It smashed into the blue corridor trend line and took off again. So we had a minor consolidation, or you might call that distribution, before it took off again. So within the blue corridor, you can expect these type of little distribution patterns. I think you might call that a bullish flag or something like that. So that's how you can determine on a chart pure markup and pure markdown, and then you can easily see accumulation and distribution patterns because they're the only ones that are left. Price has to be called markup or markdown if it's moving up or down at a certain pace, and that's why Wycoff 2.0 is more definitive. I haven't put the Hurst angle, Hurst cycles onto here, but they're excellent for determining the next cycle peak, which generally does attract some sort of accumulation distribution or some sort of pause in the markup or markdown. Obviously, when I mention accumulation distribution, you're talking about anything from a 3 to 4 week flag to a 3 month or a yearly pattern. Hope that's a bit more instructive of what the Wycoff 2.0 can do for you. It allows definition of the phase on the stock chart. Thank you very much for your time. Cheers.